Well, Apple reportedly planning to release 3 new iPhone models later this year in an attempt to woo customers, but this after the company announced that it would miss its sales targets for the final quarter of last year by at least $5 billion, causing that stock to take a huge hit. Now, on the flip side, tech giants like Netflix and Amazon, well, they're riding on highs right now on Wall Street. And so will Apple's efforts be enough to get investors back into the stock? Joining me now, wireless fund portfolio manager Paul Meeks and Loup Ventures managing partner and tech analyst Gene Munster. Hey, first of all, guys, you are the 2 top names when it comes to Apple. I appreciate you both being on together. Let's start with that, Gene. You came out with a very robust, bullish, some even say gutsy call on Apple right before the bad news hit. Where are you right now? Where do you stand?
Still a believer in that prediction. Just to recap the prediction, is we expect that in 2019, Apple will outperform the rest of FANG. It was clearly not the start to the year that we had hoped with that prediction, but I'm still optimistic for a couple of reasons. Number one is that I think there's a fair amount of bad news already priced into it. And second is historically this has been a pendulum. And while the first couple quarters of the year won't be that great for Apple, I think that the back half, as that stabilizes, I think that that should be a positive for the multiple. There's other good things going on, but the simple answer, Charles, is we still feel good about that prediction.
Paul, I know that you were relatively bullish on the stock. Are you still feeling that this maybe at this level it's oversold?
I think it's approaching oversold. I value the balance sheet and the services business combined at about $115 to $120 a share. And so I typically like to see no more than 10% downside risk. Right now, if you were to buy that based on that philosophy, you would be exposing yourself to about 20% downside risk. And so the way I look at it, it's getting closer to where I may be interested. But I want to hear what they say on their conference call because I do think there might be more bad news coming. And I actually think within technology, I wouldn't go with Apple. I wouldn't even go with any of the other FANGs. I think there are better ideas for a bigger bounce in 2019 beyond the FANGs.
I want to get to you on that, but I do want to get back, and since you brought up the FANGs, and Gene, this, in the last week, since last Friday, Netflix, last Friday got the most coveted buy rating on Wall Street, which is the conviction buy list. And Goldman, Imperial Capital gave it a 459 target. Buckingham went from buy from underperform. That's a couple of ratchets up. UBS put a buy on it this morning. And Raymond James said this morning it's a strong buy. The stock has become a rocket ship. So it does show that investors want to get back into these names. What do you make? Is this a mistake, though, you think? Everyone's piling into Netflix?
I think so. I think it's generally missing the point. I'm always get nervous when there's too many analysts on one side of the equation. I feel like Netflix is quickly approaching that. And just to recap there is that they've obviously had an incredible run with great content. And content is a differentiator. It is defensible. And Netflix has an opportunity. They have about 150 million global subs today. And they think of their addressable market as about 750 million. And still growing really well. So I can understand why people are, at least today, kind of jumping behind this. But the question should not be, is Netflix going to grow? Because it will grow nicely. The question is, will there be incremental growth, be positive or negative relative to expectations? And I suspect that the expectations are going to start to soften. Some of that optimism is going to soften in the middle of this year. In particular, as Amazon, we start to see some of the results of their increased spend.
Right.
And you'll see a little bit from Apple this year, too, on new content. And I suspect that'll be negative for Netflix's multiple.
Paul, what else do you like in tech then? What should investors be looking at in tech besides these household names?
So I do within FANG think that Google, or Alphabet, as it's now better known, is a nice blend of valuation support, which is rare for tech, and growth opportunity. You get beyond that, what typically cracks first when technology gets in trouble are the semiconductor names. And so it makes sense that when technology comes back, they will be led by some of the very same semiconductor names. So right now, I am much more bullish for the next couple of years on a couple of semi-names. AMD, Advanced Micro Devices, NVIDIA, Micron, and a couple of other names like that.
All right, full disclosure, I'm also long AMD. I thought it was oversold about a month or two ago. Gentlemen, you are 2 of the best. I enjoyed our conversation. Have you back real soon. Paul and Jane, thank you.